Good evening. My name is David Reed, and I appreciate you attending today. By doing so, you're expressing an interest in doing business in the United States. I don't know what that business will be. I don't know where you want to do it. I don't know when you wish to be there. So my presentation is going to be focused on giving you the basic information that will allow you to understand better the differences of doing business in the United States, what to expect when planning on doing business in the United States, and therefore how to prepare for doing business in the United States. With that being said, allow me to turn my PowerPoint on and share that with you so that you will be able to see what we're going to discuss. So, doing business in the United States. We're going to have three different major themes today: choosing a law, choosing an entity and tax and relationship, and then operational issues. As you can see, each one has some subcategories, and hopefully I'll be able to address all of the issues in each of those categories. But if you have questions, we will have about 15 minutes at the end for question and answers. So please feel free to submit them in the chat box as we go along. And if you'll please be kind enough to make it clear what you're referring to, because we will cover a number of slides and a number of topics, and I'd like to make sure that my answers are for your specific question. Thank you. Choosing a law. It's important when I present to people around the world that we emphasize the fact that there is a nation and then there are states. Our federalist system, set up by the Constitution, contains an enumeration of powers that are expressly provided to the US federal government, but reserves all other powers to the states. And that is a conflict and an overlap and a confusion for many people coming from outside the United States to understand that there are federal laws, state laws, city laws, town laws, county laws, regulations for all of those laws, and that where you are operating, where you were formed, where your employees live, all have an impact on what laws and regulations are applicable to you. So with the federal law applicable everywhere, we also have the 50 states of the United States. We have the District of Columbia, which is not a state, but is part of the United States, obviously. We also have territories: Puerto Rico, Virgin Islands, Guam, Northern Mariana Islands, and the American Samoas. I'm not sure any of you will be looking to operate in those territories, but please be aware, particularly with Puerto Rico, very unique set of rules and laws, different from the traditional laws that we expect to see in the United States, but still governed by federal law as well. Federal laws impact some of the bigger issues associated with doing business in the United States: the environment, national security, labor, transportation, discrimination and civil rights, monopoly situations such as communications, utilities, etc., securities issuances, meaning stocks and bonds and trading in those stocks, and then as well as import and export, restrictions on both. There are exceptions, however, for federal laws, and those exceptions are normally stated in the law themselves. For example, some laws regarding company operations apply only if the company has more than 50 employees or more than 150 employees. And it also may apply or exclude, depending upon which way it's looked at, companies with turnover, annual revenues that are either above or below a certain amount. So presuming that you're coming into the United States, presuming that you're going to begin with very few employees, and presuming that you're going to begin with no annual sales or revenues, chances are many federal laws are not going to apply to you because they are designed for larger corporations. However, there's another exception. The exception to federal laws can occur when state law is more strict, more stringent, harsher, um, greater benefits to citizens and fewer benefits to the corporation. In those instances, many times the federal law specifically says, unless superseded by state law, this is the law that applies. So they allow for that exception. There is one rule above all other laws, though. The federal government will get what it wants. Case in point, federal government does not control our highways. It controls the highway system, but it doesn't control what happens on the highway within a state. When the federal government wished to preserve fuel and energy back in the 70s, they wanted all states to lower their speed limit to 55, believing that that would be a way to improve and conserve energy. States had the right to reject that. Many did. The federal government turned around and said, well, if you don't accept the 55 limit, we will not give you federal highway money for your roads. So the states conceded. Every state in the nation went to 55 because they wanted to have the federal money from the federal government. So the federal government may be limited by the Constitution, but the ability to control tax dollars and how to spend those tax dollars gives it a lot of power over the states. When you look to a state, you must look to a state because you must choose to form your entity in a particular state. We do not have a federal registration. There is no U.S. corporation. There's a state corporation. You are filed in New York or you are created in Delaware. It's important to look at what those laws of that state are because you are choosing to form there, but that's not necessarily where you are choosing to operate. So how do state laws vary? Historically, it's based upon the particular history of that state. We have an industrial north versus a far less industrial south. So the laws in the north are often much more stringent on certain types of entities and certain operations. We also have heavily populated areas, the East Coast and the West Coast, versus the less populated middle part or southwest part of our country. There, some of the regulations are not as important. I'm sorry, that's not fair to say. Their laws and regulations in those less populated areas may sometimes be less stringent with regards to the environment, less stringent with regards to land use, less stringent with regards to how land is developed, because they have much more of it, they have fewer people. There are also issues of liberal versus conservative. California, Vermont, Massachusetts, Oregon, Washington are all viewed as liberal states. They not only do things differently than other more conservative states such as Michigan, Georgia, Wisconsin, Ohio, Indiana, but they also do them in a way that sometimes it creates greater benefits for individuals. And so therefore the laws relating employment may be harsher from a company perspective, an employer perspective in those liberal states than they are in the conservatives. But there's still a benefit to forming in some of those states, even if you're worried about labor laws. Where to form? First question you have to ask. If you've made a commitment to come to the United States, what state will you form your entity in? Delaware is a very common one. It's common because it traditionally had provided benefits to new entities that did not exist in other states. Many of those differences have disappeared over time. New York, Nevada, Montana, even California have added many laws and eliminated many regulations that were detrimental, that set them apart from Delaware. So forming an entity in Delaware has the advantage of simply being known as an entity, as a state for which entities are formed. If you're interested in getting investors, if you're interested in getting shareholders, many of them feel more comfortable dealing with a Delaware entity, even though the practical differences between a Delaware entity and a New York entity may be almost non-existent. Other states that are popular for formation right now, New Jersey, California, Texas, North Carolina, South Carolina, and Florida. Some of those are popular because of taxation laws. Florida, for example, has no income tax on individuals. So if you are going to be employing a large number of people, you can save significantly on your wage costs by locating in Florida, hiring people there, and paying them less because they don't have to account for taxes out of their wages. North Carolina, South Carolina are very popular currently because of low labor costs and because of tax incentives and economic incentives that are being provided by those states. Texas, very similar, large amounts of free land that are being given to large corporations that are coming in from outside. Foreign direct investment is being sought, is actively being brought in by commissions and agencies that are set up. So there are opportunities to negotiate and get good deals for what you want to do if your opportunities are employment, manufacturing, direct investment into an area. Puerto Rico is a very unique situation. I have a number of clients outside the United States that wish to enter the US in order to enter into the pharmaceutical market. Currently, the US has a large question around the quality and safety of their drugs, in large part because many of the drugs are manufactured in India, or the components are manufactured in India, and may be not as clearly monitored by our FDA, Food and Drug Administration, maybe not as well as inspected, and maybe the products are not quite as pure as they should be. Therefore, I've been encouraging my clients to consider, if they're going to come into the United States, if they wish to sell and market their products here, to manufacture their products here. North Carolina, South Carolina, Texas, Florida, all wish to lure those companies to their states. However, I encourage them to consider New York, New Jersey, and Puerto Rico, because each of those areas have existing facilities that are underutilized. They were built years ago. They were built to certain standards. For one reason or another, the pharmaceutical company that had been operating them has reduced its presence or possibly even eliminated its presence. But it's far easier in most instances to take over an existing location and get approvals to reignite it, to begin again making things there, than it is to go to a green field, a former cow field or farm field in Texas, and get all the permits necessary for handling chemicals, for doing manufacturing, for emitting toxins into the air, for bringing in clean water, for taking away dirty water. All of those things require permits and time. And although the land may be free, that process is not. So depending on the type of business you're in, it may be possible to come to an established area like Syracuse, New York, or one of what we call Rust Belt cities, Pittsburgh, Detroit, other cities, and find a building that's already been built, that's available for very low cost and can be modified to fit your needs very easily, rather than building from the ground up. But keep in mind, Puerto Rico is an island. It's difficult to get to sometimes. Hurricane season is particularly a difficult time to be operating in Puerto Rico. We've had issues with power and utilities. So those issues associated with Puerto Rico also apply to the other territories, the Virgin Islands and Guam. Sometimes they're just too far removed from product that has to be manufactured and supplied, or from the markets that have to be supplied. Entity type. I apologize for not being familiar with how entities exist and what entities exist and how they're formed in Russia. But here in the United States, you're basically going to be considering only a handful. Partnerships. They don't require any filing or formation under the state law, but they do require an agreement amongst partners. That agreement creates equal liability for all of the partners when it's a general partnership, or it gives superior protection to one or more limited partners, while all of the other partners bear the majority of the financial risk. Two types of partnerships are general or limited. The other types of entities all require filing with a state. So let's just keep it simple. We've assumed that we're going to file in Delaware. Delaware has a limited liability company law. It tells you how to create your entity. It tells you how to file it. The regulations tell you how much you have to pay to file your document. The document is anywhere from literally 1 page long to literally hundreds of pages long. It's called a certificate of incorporation. There are standard forms for the simple ones, 1 page. There are no standard forms for the more complex ones. But the limited liability company has the advantage of being a partnership with some real protections and real opportunities. For example, the owners are called members, and the members may or may not be the individuals who govern the partnership. I'm sorry, the limited liability company, unlike a partnership where every partner has equal liability. When you create the limited liability company, you are going to also create an operating agreement. The operating agreement is going to be the agreement among the members, the owners, that says who has what responsibility. How do you decide if you're going to invest in a new business? How do you decide if you're going to file a certain type of submission to a certain state? Do you have to have a meeting of the members? Does it have to have 50% or more or 75% or more members present to constitute a quorum? So that's an operating agreement. You work with your attorney to draft it. You make it customized to your specific needs. Corporation, most traditional form. Those are the things that end in Inc., INC period, incorporated. Basic entity, you have shareholders as the basic owners. You have officers and directors who are guiding the corporation's operations. And although I didn't mention for limited liability companies, the same thing applies for corporations. Choosing a state to form in does not stop your requirements for filing with states. If you form in Delaware, most companies do not operate in Delaware. They create their headquarters wherever their manufacturing facility is, or they create their headquarters wherever their vice president of sales is, if it's going to be a sales organization. They may even choose someplace that's convenient for the foreign owners to get to. I have clients out of Korea who like Las Vegas because there are nonstop flights to Las Vegas. Las Vegas has no other connection to their business except that that's where they create their headquarters, and now they can easily get back and forth. Same might be said for Chicago, New York, Atlanta. Places that have nonstop flights to where you are easier to get to, easier to send your sales force, your management, your researchers, your accountants, executives there than if they're located in some place such as Syracuse, where you have to make possibly 2 or 3 transfers to get here. But once you operate in a state, you must file in that state as well. And it can be almost as difficult to file there as it is in filing in Delaware, which doesn't mean difficult as in complex, just means you have to do it and you have to then renew annually, you have to pay fees. It's an expense, it's a process that has to be followed and complied with. Here in the United States, we have another type of entity called not-for-profit, often referred to as an NGO outside the US. Not-for-profits have no members, no owners. They are for the benefit of the public, and then they deal with things like arts, education, science, etc. They have officers and directors who are guiding the operations, but they also don't have profits. They receive income, revenues, they receive donations, they receive grants, and then they spend it. They do not pay taxes. So those types of entities, partnership, limited liability, company, corporation, and not-for-profit are the major ones that you probably would be considering. The time and cost for forming all of those varies tremendously depending upon the state and the type of entity, but I can give you some parameters. Here in the United States, unlike many other countries, you can form a legal entity in 1 to 3 days. Literally in the next 2 hours, I could have a corporation formed for you in New York State. The cost for that is anywhere from $2,000 to $5,000. And that cost includes the filing fees for the state. It includes the legal fees to prepare the documents. It includes the documents themselves, because you have to have a corporate minute book, you have to have a seal, you have stock certificates, all of those things. So 1 to 3 days, $2,000 to $5,000. The other distinction in the US versus other countries that I'm familiar with, we have no minimum capitalization requirements. So not only can you come into the US quickly, but you can do it cheaply because the costs to form are low and you don't have to capitalize. You can open a company bank account for $50. So $2,000 to $5,000 becomes $2,050 to $5,050 to have a legitimate business formed and up and operating with a bank account available to you. Tax status. Every entity is presumed to be taxable except for the not-for-profit. However, even those taxable entities can find a way to avoid tax. First of all, we understand the tax concept is often just total revenues less total expenses equals taxable income, and then you pay a tax on it. Well, depreciation, other things can bring that taxable income down to zero. Particularly in your beginning years, you may actually be at a loss. And those losses under US tax law would allow you to carry forward into future years, so that if you lose $300,000 in your first 5 years of operation, it's not until you've made $300,000 of profitability in your next years, until you've earned $300,000, you will not be paying taxes. Once you do, now you can start paying taxes. So even a corporation that's taxable may have an extended period of no tax. Same thing with an LLC. However, the corporation may choose to become a pass-through entity. Pass-through entity means the IRS, the Internal Revenue Service, our federal taxing authority, and the states will not charge tax, income tax, to that company, whether it's a corporation or an LLC, if they've chosen to have pass-through entity status. Instead, the profitability, the taxable income, gets distributed amongst the owners. For a corporation, we call that new corporation an S corporation because it's subchapter S of the IRS code. Small corporation, think of it that way. It's very often the way it's treated as smaller companies will choose not to pay a tax at the corporate level, but instead pay a tax at the owner level. Same thing with LLCs. They can select the sub S status. They will have their members paying taxes. It avoids double taxation. Many times you pay tax at the corporate level, then profitability that's left over gets distributed to the owners. They then pay a tax on that. Now you're just passing everything down to the owners. Not-for-profit, again, do not pay taxes. How are you going to be related to the entity you form? Please keep in mind, I have not mentioned anything with regards to any of these entities as to foreign status of the individuals who operate it, who are officers or directors, who own it, are members or shareholders. Those are generally not factors that we need to consider. You can have your foreign person, your current vice president of sales, become the president of your new operation in America. No residency requirement, no minimum amount of time here, no citizenship requirement. The only time that citizenship is a factor is in S corporations. For some reason, it has been determined that S corporation shareholders must be US residents. LLCs do not need to be. LLC members can be someone's residing in Moscow as a Russian citizen. It could be someone who's a US citizen residing in Berlin. There is no residency or citizenship requirement for LLCs. However, there is that one exception for S corporation shareholders. But how are you going to relate? Will you be a wholly owned subsidiary that you create in the US? Therefore, if it's a corporation created in Delaware and it has 2,000 common shares, those 2,000 common shares are owned by the parent company in Russia. It can be done that way. It can be done that you share ownership, joint venture. The 1,000 shares of common stock are owned by the parent company in Moscow. 1,000 shares are owned by a, partner company in the US. It's equally owned. And it doesn't have to be equal. It can be any percentage, any ratio, any relationship that they want. That's a wholly owned subsidiary. Could also be an affiliate, which is the 50-50, 20-80 type of thing. Could be completely independent. You may wish to create that entity and have it go public and have the only ownership be incidental to the company purchasing, as well as all of the world being able to purchase those shares. Franchise and license are two other ways that you can create an entity and control it. In a franchise situation, such as restaurants, you'll want to be able to have control over the quality, control over the trademarks, the image, the branding. You want that entity to function independently for legal existences, but completely under the control of the governing documents that are created by and signed off by the owner, the franchisor. When you have intellectual property that is patents, or you have intellectual property that are trade secrets, and you wish to have that entity in the United States use those IP, you want to have a license. The license is going to say the geographic market, it's going to say the industry, it's going to say the products, it's going to determine how payments are made, royalties are made, when they're made, whether it's going to be an upfront payment and then a percentage of sales, whether it's a percentage of gross sales, net sales, things like that. And then finally, just because you've created a corporation in the United States that has shares, it does not mean that's a publicly traded company. In fact, it's the exact opposite. The presumption is that you are privately held. Usually 1 to 100 shareholders can be a privately held company. If you go public, then you're talking about identifying a stock market that you're traded on, such as the New York Stock Exchange. You're going to be subjected to federal securities regulations, to state securities regulations, to filings, much more disclosure requirements, limitations on trading opportunities. For example, if you're an officer or director of a publicly traded company, you should not be selling or buying stock in that company based upon insider information. So those rules and restrictions are far stronger, far more relevant if you're going to be a publicly traded company than if you're a privately held company. Of course, you also know the drawback of being a privately held company. When you wish to exit, who's going to buy your shares? How do you value them? Much more difficult if you don't have trading on a regular daily basis of the shares to determine what the price is and what the value is. General obligations for any entity coming into the United States, pretty much the same. You must act as a business. Corporations have to have their annual meetings. Annual meetings are the board of directors and the shareholders. The meetings do not have to be held in the United States. The meetings do not have to be held at a particular time, but they do have to be held. Minutes have to be kept. LLCs, not a statutory requirement for the meeting, but it's strongly encouraged. It's a good business practice. It helps establish that the LLC is more than just a group of people doing whatever they want to do, that it's really a legitimate entity. You also, as an operation, have an obligation to make filings. And this can be the place where many companies get caught into a problem because they're unaware of what they don't know. They have filing obligations that are quarterly, for example, wage reports, sales tax reports, and then the submissions of payments that have been withheld. We don't have a VAT. We actually collect sales tax, and sales taxes are collected at varying amounts. Here where I live, it's 8% of the sales price. Other places, it's 3% of the sales price. Some places, it's 9.5% or 10% of the sales price. That's a surprise to many foreigners because normally VAT means the price that is listed on the product, the price that's listed on the invoice is the price that has to be paid. There are no additional add-ons. Annually, income and sales tax returns and payments have to be made. But don't think of it just as a single payment or a single return, because there are federal government filings that have to be made. There are state government filings that have to be made. Cities and towns will also impose income tax, but cities, towns, and counties and school districts will impose real estate taxes. Sometimes those are paid on a calendar basis, January 1st to December 31st, and sometimes they're paid on a basis of July 1 to June 30. Failure to comply with any of these obligations can create personal liability for officers, directors, members, and managers. Please keep that in mind. You don't wish to go through the process of creating a legal entity, providing you with protection against personal liability, and then lose that protection because you fail to do the things that are necessary. Lawsuits may also pierce the corporate veil, trying to impose liability on anyone who had authority or benefits. That means a shareholder may become liable for something. Generally, shareholders are not, if they are not officers, if they're not directors, if they're not managers. They don't have fiduciary liability or responsibility, but sometimes lawsuits can create that. Management is done by officers. In almost every situation, we call them presidents, vice presidents, treasurers, and secretaries. Those are the officers that are recognized under state laws. But we also have titles that are appropriate to the company. The titles recently that we hear all the time, C titles: chief executive officer, chief financial officer, chief operating officer, chief medical officer, chief science officer, chief technology officer, et cetera, et cetera. Those are company titles that are created internally to the company, and the authority that they have is decided by the company, whereas president, vice president, treasurer, and secretary are created under state law and have the authority provided under state law. One person can have all of those roles, or you can have a different person in each role. So you can have a president who's also the CEO, who's also a shareholder, who's also the secretary and the treasurer. You could have a vice president who is only a vice president. You might have a board member who's not an employee or an officer in any way, shape, or form. Directors may be officers or not, and may be employees or not. We have a lot of larger companies that seek directors from outside their entity, but familiar with their industry, can provide them with guidance. And then in LLCs, you have managers who are managing the LLC, may or may not be members. It depends on the operating agreement and how it's drawn up. And they may or may not draw wages. Again, it depends on the operating agreement. The important part here, another huge distinction between the US and most foreign countries that I've dealt with. We have very few laws governing the employment relationship. In almost every state, you should presume that you hire someone, it's an at-will relationship. You hire them, you can fire them. Now, over time, there have been wrinkles added to all of that. For example, you cannot fire someone for an illegal motive, such as discrimination, for whistleblowing, for other things. But absent those wrongful reasons, if I just choose to wake up tomorrow and decide I don't want to have any employees, I can terminate them. And that means termination of employees who are salaried or hourly, the two types of ways we pay people, full-time or part-time. Full-time here is generally considered 35 hours a week or more. There are contracts in place sometimes, particularly for salaried employees, or if there's a union involved, and we have very few union rules. Most states are states that by law say you do not have to be a member of a union to work. Unions are present. They're not nearly as strong as they used to be, and they're certainly not as strong as they are in many other countries. If there's a contract for the employee, and that's a union contract, well, you look to the union contract for terms about hiring, firing, promoting, benefits. If it's an individual contract, generally the employer defined the contracts, defined the terms, defined the benefits, 2 weeks, 4 weeks of vacation. There is no state minimum. There's no requirement that you have 6 sick days. Employees can be permanent or temporary. Benefits, as I said, are generated, generally determined by the employer. And the termination process for all of this varies from I woke up this morning and you're gone this afternoon to here's your 2-week notice. You'll receive a 1-year severance payment in order to comply with the terms of the contract, or I'm sorry, and the employee may have rights under state law once terminated. Those rights, though, are generally to benefits, unemployment benefits, to help bridge until the employee finds a new job. But they're not necessarily benefits or suits against the employer unless there were illegal motives for the decision to terminate. Independent contractors are a completely different category from employees. They look like employees. They can sit there and be right at the desk next to an employee doing what looks like the same job, but they are not an employee. The employer has an independent contractor relationship with a vendor. And the vendor could be that individual sitting at the desk, or it could be a company that sent the individual over. This is done oftentimes where we don't know as an employer how long we need these people. We don't know how long the contract's going to last. We don't know if we need 3 or 6 to do the work. So we try this approach of using independent contractors. Much more flexibility. Then industry and products involved determine applicable federal, state, local licenses and permits. Tremendous numbers of opportunities for us as a company to fail to meet the requirements. We may not know what they are. So usually you want to retain an attorney in the area where you're operating and make sure that they're well-versed in the rules that are applicable to your specific industry and the types of products that you're making. Insurance is a huge issue because every risk that exists generally has a law trying to minimize that risk, but risk still does exist, and you still may find yourself as an employer being exposed to liabilities. So you want to have insurance for employment, for fiduciary obligations, for general liability, for automobile, malpractice, business interruption. You must have the right insurance, absolutely. But it's even more important to know what the exceptions and exclusions are that limit the insurance. Coronavirus is a huge example. Many people with business interruption insurance have said, hey, I could not get to my plant. I could not get my people to my plant. We could not operate. We could not make the products. Therefore, we couldn't sell. We lost business. And the insurance companies have replied, well, hold on, you lost business because the government said you could not go to work. And the reason they said that was because of COVID. There was no damage to your building. There was no damage to the access. There was no physical presentation of disruption. It was simply a governmental rule. We don't insure against that type of business interruption. A lot of lawsuits from that in the US. Real estate, are you going to own it? Or are you going to lease it? Real estate in the United States is relatively inexpensive, relatively easy to acquire, relatively easy to obtain loans to assist you in acquiring it. Leasing, equally easy. You can have a very short-term lease, month to month, year to year. You can have longer leases. And those leases can have payment terms that simple flat dollar amount every month, very predictable, good for your budget. Base rent plus percentage of sales. So if you're in a retail operation and your store is very, very successful, the landlord is going to want 5 or 10% of your sales profitability for being there in addition to that base rent. Or you can do a triple net. It's basically you acting as the owner of the building, but you don't own it. You have all the obligations of maintenance, paying real estate taxes, paying insurance, but you don't own the building. Exit strategies. You come into the United States because you're going to be successful. However, when you are successful, you may still want to get your money out. We haven't even talked about transfer pricing, about taxes on transfer pricing, about taxes on IP. However, we can talk about exit strategies. If you sell your ownership, you had 1,000 shares, that was all the shares that were issued, you sold it to somebody else, you are now relieved of any obligation. That business continues under new share ownership, but it may continue with the same management, same employees. Nothing's changed from their perspective. The company they work for is still the company. It's just that the shares are owned by somebody else. You can sell the entity's assets. You've developed a huge following. You've got a wonderful client list, and you've got great inventory, but the purchaser doesn't want to own your company. They just want your client list. They want access to your clients. They'll buy those assets. They'll buy the inventory. They'll buy the work in process. You still own the shares. The company still exists. You still have obligations for that company, or you can go ahead and use that company to do something else. Really important here in the United States, you're never restricted as to what your entity can do. You may have started it to manufacture refrigerators, and by the end of 5 years of being in business, you found out you really want to build the houses that the refrigerators go into. You can do that all under the same entity. You can merge or be acquired. Remember that joint venture concept where you own 1,000 and somebody in the US owns 1,000? They all of a sudden say, you know what? We want this entity in the US to be folded into ours completely. We want to merge it. We want to acquire it. When that merger or acquisition happens, the entity that you are so familiar with may continue as a subsidiary. It may become a division. It may disappear completely, and all that's left are the product lines. Dissolution, the final step. We all want to be successful, but if we aren't, and we want to just withdraw from the market, we want to be done with what we're doing, don't just walk away. Don't just lock the doors and leave. You must follow the rules for dissolution that are applicable to the state you formed in and to the states you're operating in. That stops you from having future obligations and liabilities, because they will continue if all you do is stop operating. The state will not care about that. They'll say you're still a legal existence. So conclusions. The United States is a huge market in dollars, in numbers of customers, and in the breadth of product offerings. The barriers to entry are low. It's easy to form an entity. It's quick to commence operations. There are low employment costs and there are low taxes. But because of that, competition can be fierce. There can be many companies in your industry. There can be many products that are considered competitive to yours, and there certainly can be many markets. If you're selling in New York City, that doesn't necessarily mean you're selling in Los Angeles. Somebody in Los Angeles could be selling the exact same product, and you and them will never have a problem because they stay in their market, you stay in yours. Commodity products are successful as lowest cost, widest availability offerings. If you can come in and flood the market, if you can make them available anywhere, same-day delivery, next-day delivery, free delivery, you will have a good success of succeeding. If you're a niche high-tech product, however, you may likely be best and most successful as a highest cost, restricted availability product. Think about iPhones that are offered here in the United States for $1,000, and everyone wants to fight and brag that they got theirs first before anyone else did. Cancer treatments are possibly in this category. Unique drugs that are life-saving. People will pay extra for that. They will absolutely do whatever it takes to make sure that they or their loved ones get those products. Regulated products such as drugs and medical devices have high barriers. They have huge amount of regulations. They're niche markets. You can only sell to certain doctors or to certain hospitals. But when you enter that kind of market, you're benefiting from a regulated monopoly with huge profits. So that was my 45 minutes. This is who I am. And I believe I can now stop sharing the screen and take any of those questions and comments anyone has. So question one from Yevgenia. What are the advantages of being a sole trader in the US, and what are the requirements for a sole trader? So if what you mean is a sole business owner, doing business as, you're an individual. You have not filed, so that one of the advantages is no cost. You create your business today. I'm an artist. I paint these types of pictures, which I did not. I wish I had. I paint those types of pictures. I sell them. I can create a website. I can sell, no problem. I can take a commission. I can do whatever I want. It's me wherever I want to do it. I will, of course, pay income tax based on where I do my business. So if this sale takes place here in New York, I pay New York State income tax and sales tax. But if someone contacts me from Pennsylvania, I may have to pay income tax and sales tax in Pennsylvania. So the advantages are simplicity, low cost. The disadvantages are there are no protections for you. Anybody, if you could do it, anyone else can do it. So if you come up with a great idea and you start marketing a wonderful product by yourself, chances are someone else is going to go out there and do the exact same thing with little protection for you, lots of competition. Question two, from Grapefruit Orange. What are the most common reasons why foreign businesses fail in the US? I would say foreign businesses fail in the US most because they misunderstood the market. But that's the same reason most US businesses fail. I advise thousands of clients over my career. Each year I create about 100 new companies. The companies that succeed are rarely in the same business 2 years later than what they were in when they first came to me. They thought they had a great product. They started to try to market it. They listened to their customers and potential customers. They modified, pivoted is a new trendy word. They pivoted, they changed their direction. The business took off. Those companies, however, that don't, that they insist they've got the best pencil and they're going to sell that pencil no matter who sells them. No, we want pens. They don't succeed. So here in the US, you misunderstand your market by not listening to them. Possibly that gets an added layer when we're talking about foreign companies coming to the US because they don't have the knowledge of what is a market. For example, many people will look at a map of the United States, pick a place, Syracuse, draw circles around it and say, oh, within 100 miles of Syracuse, there are 30 million people. That's a great market for me. However, what they don't realize is when they open their store in Syracuse, the only people coming to that store in Syracuse are the ones from 12 miles away at the most. So it's not 30 million people that are in their market, it's only 30,000. Those types of misunderstandings can also exist as to product competition. In some places in the States, we have liquor sales that are only made through liquor stores. You can buy vodka, brandy, whiskey, wines only in liquor stores. In other states, you can buy that in supermarkets. In other states, you can buy beer only at package stores that are run by the state, but you can buy wine in supermarkets that are run by private companies. If you come in not knowing those nuances, you may misjudge which state to locate in. You may misjudge who is the competition. Question 3 from Vasily. What are the common mistakes that foreign businesses make when they expand into the USA? I think the common mistake that they make is not associating with a truly informed individual in the United States. I have seen many companies, particularly in the medical device field, come into the US, hire someone here in the US, but they've hired someone who was a good salesman. That person sold their abilities to their new employer. That person wasn't necessarily a good salesperson for the product, wasn't necessarily a good marketer, wasn't necessarily a good person from the standpoint of knowing how to approach the federal government or a state government, because all of them are also purchasers of medical devices. So I think many times the common mistake that a foreign entity makes is not finding the right person to be here. Now, there's 2 aspects to that, not just the person in the US that they hire, but the person from their home office to manage and to make sure the relationship is working well. I have several Korean clients. They purchased a home near their facility. Every 2 years, they send a new general manager in. The general manager moves their family here for 2 years, living in the house. It's already been a house for Korean occupants, so there's no issues of how it's designed or how it's furnished. They easily come in. They then integrate with the established American workforce and work closely with them to better understand not just the US market and the knowledge that the US employees have, but also to then communicate that to their parent company in Korea, who can say, oh, we're really looking at this or looking at that, and expect their Korean employee who's there as a general manager to begin implementing and integrating the parents' views into the realities of the US marketplace. So if you don't assign the right person from your entity to interact with and play translator with the US company, you may also fail for that reason. How does the US government support businesses during the pandemic? Very badly, very badly. If we're aware of things such as the UK and other countries where, I think Sweden was another one, the federal government helped subsidize the payroll of businesses, you would see there the businesses continued with the same headcount, the same number of people, even if sales were down, even if revenues were depleted. The money was coming in, the employees stayed employed, they were able to go to work or work from home, but they had that same job that kept them comfortable as far as being able to make house payments, that kept them comfortable with benefits such as the nationalized healthcare, things like that. Here in the United States, completely different. We chose to send $1,200 checks to individuals. Federal government sent a $1,200, $1,200 check to everyone who had filed a tax return. Well, not everybody files tax returns, particularly the poorest individuals. By law, you don't have to file a tax return until you make a certain minimum amount of money. So if you have always been underemployed or went for an extended period of time in the prior years of not being employed, you never filed a tax return. So you're the most needy as an individual, but you get none of that money. Businesses were borrowing under a PPP loan program, payroll protection plan. They borrowed the money, and now we're looking at it and seeing that many businesses took that money and instead of keeping people employed, used it to pay off other debt, used it to pay salaries for officers and keep them employed. So the federal government and the state governments were all shamefully behind when it came to worldviews and standards as to how they were supporting businesses. And we're going through the second wave in which we're now looking at, should we make more money available for more loans to more businesses? And unfortunately, the current political situation with the election and whatnot is causing it to have no action. So that's the answer. How are they supporting businesses? Very badly. Another question from Jet Sober. Are there any ways to do business with government? May tenders or something? Yes. Thank you for raising a part of the conversation that I overlooked intentionally. If you're selling to the federal government, you're not just selling to one office. There are things such as the Department of Defense. There is the Veterans Administration, hospital system. Federal government has Medicare and Medicaid programs that you can sell to. Federal government operates other systems that people can sell to. But you don't go in with just one application or one tender. You have to go to each of these offices, each of these departments. There's also state governments. They have their own purchasing programs. They will have college educational systems with thousands and thousands of students enrolled and thousands of employees and tens of thousands of buildings and acres that all need to be attended to. You can sell to them. You can sell to one facility, the local college. You can sell to the entire college system for New York State. Those are different applications, different tenders, but they are there and they are available. And certainly during the COVID crisis, if you as a foreign company have product that is helpful for PPE, product that's helpful for limiting the spread of the disease, state and federal governments are great places to sell to. Question 6, and this is the last question. And this is from Alexander, where can a business owner find detailed information about regulations, taxes, insurance to research and understand all factors of operating in the US? Is there a government website or database, or should you hire a lawyer? The answer is, I'm not sure. I don't think you can find it all in one place. I think it's more like peeling the onion. What's the first question that you're addressing? It may be market. You may want to just evaluate the US to see if your product can sell here. Then you start looking at the next layer, and where do you find the information on to what state to go to? Well, there are brokers. There are people who are actively promoting a state or multiple states or even cities within a state. And you may want to try to just pick a place. My client in Finland was ecstatic about opportunity to create a business in Florida. They happened to love vacationing in Florida. When they found out that they could actually do a business in Florida, I don't think it mattered whether Pennsylvania or Indiana offered better economic terms. They liked Florida, and that's where they were going to go. So once we knew they were interested in Florida, then we could look at Tallahassee, Orlando, Palm Beach. We could look at county benefit programs. We could look at cities and see what was being offered there. So there isn't one place. There's a lot of places, and where you look is going to depend upon what answers you need and the questions that you're asking at that time, because you're also going to be dependent upon where your employees are. One client, and this is hopefully settles it. One client says, I don't know where to locate in the United States. And it was in a meeting with a bunch of businesses. And I said, well, I've got the same answer for each of you, even though you're in vastly different businesses, where you should go. And they were amazed because it sounded like I had one answer. And the answer is wherever your local competitor in your home country is located in the US. So if you wish to come to the US and you're not the first one in your industry from your country to come to the US, look where your competitor is and do what Burger King and McDonald's do. Locate next to each other. The benefits of that are many. When you come to a place where your competitor has already been established, you have the opportunity to steal their employees for $1 or $2 an hour more. They're already trained in your industry. They're trained to your standards. Locally, you'll find vendors who have already been supplying your competitor and meeting the obligations and the standards that the competitor has, which hopefully are the same ones you have. So now you don't have to train vendors. You don't have to worry about finding them. Finally, in a small community that's very comfortable hearing German accented English and having German food items put on restaurant menus and having German items imported into the supermarket because the German company had been there for 5 years already, when you come in, your employees, your company is going to feel very comfortable. It's going to be very well accepted. So I've given you a lot of information. I've given you my phone number and my email. Please feel free to contact me. I do this all the time, consult, give some guidance. Only if you're really interested will we ever get into the conversation about whether you wish to retain me and whether or not there's any opportunity for us to do business together. But I do so appreciate this opportunity to speak to you. I appreciate the opportunity from the American Center in Moscow to have a venue. And I look forward to possibly doing it again in the future. So thank you very much.